the microphone will be sounding. Mic check 1 2 1 2. Buy side liquidity was taken out. We had a very tiny SMT here with the high on SPX being at 942 and NQ having its high at 942, yeah, and SPX had its high at 944. So we swept the previous high, so there was SMT here, so we were showing that this was stronger. Why? Because we put in a higher high at this specific candle and failed to put a higher high on NQ. So there was a smart money injection of sellers in there, and you can see the high 942 and this is the 944 candle. So there was significant failure to take out this high. This is the high by this candle, which is the 944 candle. As you can see, it isn't going through, yes, but at the same time here you can see that the 944 candle, that's it, was higher than the previous leg higher. So with that confirmation for SMT, okay, this was quite a late confirmation, but the only entry that we would have gotten would have been at this inversion fair value gap here, which was offered immediately after a close below. So what would we not expect any buying to go higher than this high that formed this SMT? I know it's not the usual SMT that we see on a daily, but this high was not taken out by this candle's high. So that is what SMT is. So what would you have done in such a situation? This would have been your entry on the inversion of this. Have it at that part. You stop at the SMT high and you target pre-market sell side liquidity. So that would have been a 1 2 3 in less than 3 minutes. But this is more of a technical. If I was on the chart at this point, I would have more or less been it would have been a significantly better trade to take the buy from the pre-market sell side. Why am I saying that? Because yes, there was a SMT here, but I wouldn't say it is the cleanest SMT, because you really have to look for it, and to be convinced that you're going for the pre-market sell side, you would have to have a very clear high, not SMT within an internal one and an external one on ES. So what would I use instead? We look at the pre-market highs, pre-market lows, that is, on ES, and you can see that we had not cleared it. So the pre-market lows were instant on ES, whereas there it is. This is the low that was formed in the next session, as you can see by the shaded color. This is the AM morning, and this is the AM session that I look at. This is the pre-market open, and then now this is the market open from 9:30, that is. So you can see that we did not take out the pre-market sell side liquidity on ES, but on NQ we did take out the pre-market sell side liquidity. So this was SMT confirming that we should be going higher from this point. Since I know myself, I know I'd have been looking for a buy on ES. On NQ, I always really like trading NQ. So an inversion of this fair value gap would be where I'd be taking my buy. Why? Because this is the last fair value gap before we took out the sell side. So an inversion of this fair value gap, so similar to the previous trade, as you saw, we used an inversion fair value gap. Why? Because this was what was offered. You can see we made a stab into that, and then we broke higher quite significantly, quite strongly. What would our target be? Let's look back and see what liquidity lies in the pre-market, in the overnight session. We had our Asian session highs still left intact from the overnight session, and we had just come shy off of it, and we had not taken out the liquidity. As you can see, that was a very nice target, which was a 1 to 2, roughly 1 to 2. Let me just put it at 2. There it is, 1 to 2. So this was a 1 to 3 coming down, though it was not that convincing, but it still gave the opportunity. and this is a 1 to 2, and you could leave a runner for the previous day's high, which would have been a very nice trade, I guess. So yeah, that's today's analysis. I did not take a trade today. I already had a trade, as you can see in my Telegram group, on the overnight session. There was an opportunity and I took it. So this is supposed to be blue. Make sure the charts are coded in a way that you can understand them without even looking for a lot. Like you can see that this, if it's blue, for me I always code them in color. So for this blue one, it's supposed to support price. For a red one, it's supposed to be a resistance on price when you come into it. So yeah. So for those who want to execute this plan on their own, what do you do first? Mark out the pre-market buy side, which is any high that forms from 7 to 9:30. Mark out the lows that forms between 7 to 9:30. Wait for price action at 9 post. Wait for price action post 9:30 to take out either a high or a low. Then wait for a setup. A setup is formed on any PD array that you see supporting price action in the direction that you want to go to. For this case, we had our fair value gap here, and we used it in support of price here, and then in addition to that, we had an order block forming within this area, but we did not have a tap into it. Why? Because we already had this PD array supporting price action, so that would have been enough for me to take it. So that's that, I guess. Thank you.